back to Fast Market on the TD Ameritrade Network. I'm Tom White, joined by my co-host Kevin Hinks. But let's bring in our next guest for our cash tag segment, and that's going to be Megan Brantley, Vice President of Research at LikeFolio. Thanks for being here today, Megan.
Thanks for having me, guys.
All right, so we're talking the housing market. We're talking Zillow Group, Redfin. You know, with home prices being at all-time record highs, you would expect these stocks to be doing pretty well. But, you know, Redfin's down over 70% so far this year. Zillow Group's getting smashed. Maybe this has something to do with a lack of inventory, but now we're starting to see inventory levels pick up. But the mortgage rate went from last April at 2.9% on average for a 30-year fixed mortgage. We're above 5.4 at this point. Is that the reason we're seeing the pullback and the underperformance here in these stocks?
Yeah, you know, I think whenever we were preparing charts for today's segment, we really wanted to focus in on these macro trends because I think that's really what's driving a lot of the performance that we're seeing in Redfin and Zillow, even in names like Door. And what we see on a macro level is that these mortgage rates are at or near all-time highs, or not, sorry, mentions of rising mortgage rates are at, you know, or near all-time highs. And then we also see mentions of people who are talking about moving down on a year-over-year basis. And we know from home buying sales that, you know, that rate has tempered from in April from March, and then also on a year-over-year basis. But the mentions of people who are looking for a home, you know, that's actually up on a year-over-year basis. So we see this disconnect. And I think that, you know, those rising interest rates, that is the major cause for us because it's pricing out a lot of potential buyers. But I think that whenever you look at names like Redfin and like Zillow, there's an interesting kind of divergence opportunity unfolding here, at least in our data. When we look at consumer mentions of people who are talking about using Redfin and using Zillow, we see those up higher on a year-over-year basis. And I think that especially for a name like Redfin, you know, if you look at their overall market share, I think they currently command like 1.2% of total, you know, housing sales. So that's a really small percentage. So for us, we see some acceleration in this data out of Redfin, specifically from these, you know, these iBuying mentions and things of that nature that Zillow has exited. And so we're starting to see acceleration from Redfin, but then from Zillow, we're starting to see a little bit of a slowdown as they, you know, are pulling back from that model. So it's interesting to see these two companies that are, you know, both digital tools for consumers who are, you know, looking in real estate, but we're starting to see a divergence in that performance. So, you know, long term, really starting to see some acceleration from interest in consumers specifically using Redfin.
Megan, when you look at these two companies, and you mentioned the iBuying fiasco that Zillow Group went through, and the missteps there, good Lord, how could you have let that get so out of whack? And the stock is reflecting that, right? I mean, but their latest report says they're down to, how about this? How about these numbers? In 2020, they bought 4,162 homes. Wait for it. In 2021, they bought 23,900 homes. Now, the good news is they're down to 100 homes now. They've liquidated all of them for major losses, yet this company looks like it's getting back into what it does well. Megan, here's my question. Take the iBuying part out of it. Is there any big difference between these two companies? Or are both just a pure real estate play? I mean, they're both in the same direction. Redfin's a little higher in terms of your top right metric that you guys like to talk about. But what's the big difference between these two firms, Megan?
I think that really now, especially with Zillow exiting this iBuying model, you know, that really changes kind of the trajectory for both companies. From a consumer perspective, you know, we get a lot of mentions in the similarity of people who are using these platforms to, you know, research real estate, research homes that are available for purchase and things like that. And we do see a higher happiness out of Redfin. We see a lot of mentions of people talking about the platform being more up to date and potential data points being more accurate. So I think that there's a little bit of a divergence there. But, you know, just from a business model perspective, obviously, I think Redfin has a much higher exposure to potential volatility just because of that iBuying segment. So whenever we look at these names, I think that that's really important to consider that, you know, Zillow is intentionally trying to reduce that level of unpredictability in its business model, where Redfin is embracing it. So it's almost like they're going down two different paths right now.
Yeah, Megan, Just full disclosure, I probably contributed to a lot of the scatter plot that you have there over the last 3 or 4 months. As you know, I'm going through that transition of moving next week. So I get the, the traction that you see there, and the low inventory numbers makes people probably go on those sites more and more to see if anything new pops up. But that's starting to expand a little bit. There's more inventory coming online because people want to take advantage of record home prices at this point, to maybe unload their house, and maybe they weren't looking to before, or moving to an area that they prefer from where they live now. But when you look at the data here, as far as attraction and the monetization of these companies, how they're able to monetize that, whether it's through advertising on those sites, if we continue to see interest rates and mortgage rates above 5%, maybe going to 6% by the end of the year, does that bode well for this sentiment data that you're bringing us, or does it actually continue that trend, especially for Zillow Group, lower?
I think that's really interesting to bring up, especially for Zillow Group. I think that you make a good point that, those rising interest rates, if you start to see, decreased rates of home sales and things of that nature because buyers are being priced out, that's definitely a cause for concern. But for Redfin, I think it's interesting that they have so much room for potential growth and for potential capture of market share. Right now, whenever we look at the sales that they have, with only 1.2% of total, home sales on this platform, that's extreme potential for growth. And we are seeing, just on a macro level, from consumers, more willingness to conduct transactions and conduct things like this online, to utilize some of these platforms. Whenever we look at mentions of buying a home just overall on a quarter-over-quarter basis, those are up by about 1%. But consumer mentions of, utilizing a service like a Redfin or something like that to purchase a home directly, those are up by about 31% on a quarter-over-quarter basis. So we see this transition to digital, or at least openness to digital, for a firm like Redfin being a positive sign that, yes, this firm is taking, just a small percentage of this market share. But I think that that's really important moving forward. If this is a name that you're betting on, that they're able to continue to take that market share and continue to support growth.
Right. Now, they don't have earnings coming up. We wanted to kind of discuss this due to the fact of the rising interest rate environment and the consumer kind of changing habits. But if you had an earnings score for these companies, whether it's Zillow Group or Redfin, are they positive or relatively negative?
We're seeing continued improvement out of Redfin. Our score right now for them would be about 45, which for us is pretty bullish. Whenever we look at Zillow, we have them a little bit more neutral. They're at a 21. So for us, 20 plus or minus 20 is right on that neutral line. So, cautiously bullish out of Zillow, and definitely a little bit more bullish for Redfin, knowing that this is somewhat of a binary bet on this iBuying business model that they're embracing.
Right. Zillow giving it up, taking huge losses. All right, Megan, great stuff as always. Appreciate it.
Thanks, guys. Happy Friday.
Yeah, happy Friday, Megan. Enjoy your long weekend, much deserved. That's Megan Brantley, Vice President of Research at LikeFolio, breaking down the data for us. Now, Kev,